Hello, this is Evan here from the Trade Risk on Wednesday, June 16th, 2021. We are intraday right now, and this is our weekly swing trade ideas video where we bring you stocks based on a variety of technical, discretionary, and quantitative criteria, all of which we're going to break down for you in just a moment. And as always, these videos are sponsored by our partners over at Investors Business Daily. We curate ideas from their stock lists. You can get access to their stock list with a link in the description of this video. So I want to start off with sort of a quick take here on the market as a whole. I'm actually recording this just following the FOMC announcement. So you're going to see these prices moving around quite a bit. We just had this drive down here in the S&P 500, and now we're starting to sort of bounce around the 421s. So I'm recording this intraday. By the end of the day, if you're watching this video afterwards, we could see some different prices on all these charts. So I like to always remind you that we are recording this during the session. So I want to talk about the S&P 500 here and just a quick little overview. What we're seeing today is a breakdown, attempt again, so the day's not over, but we're sort of breaking down from this recent cluster of lows, right? So this little trend that we've essentially been in here. So you could draw a quick trend line here over the past 6-7 trading days. So we're breaking down below that, and we're losing this 422 area, which is the prior all-time highs here for the S&P 500. So these are two notable sort of developments here. This is what I typically refer to as a day to take notice. We pushed pushed above prior highs here, and we traded for a few days, and now we are quickly and swiftly sort of breaking back below that. Now, I want to see how the day closes. I want to see how the week closes. Those are two important things I'll be paying attention to. But in the very short term here, I'm speaking short term, we want to be a little bit cautious because we are losing this momentum. It's taking the enthusiasm out of the market here. We're starting to reject and break down at a fairly significant short-term point. So I think that's notable. I think that's interesting. We're going to look at some technical trade ideas in just a moment. Most of them are actually on the long side, so you just have to keep the broader context in mind when you're looking at some of these setups, and you want to make sure it fits your time frame and all of that to really sort of frame out a trade. So I'm paying attention to this. Again, it's a short-term development. It doesn't speak to anything on the intermediate term basis. Everything is still healthy in uptrends on the intermediate and long term. We are sort of highlighting this short-term breakout. You could break down. You could look at even at the Qs. Same thing here. So we pushed up. We sort of poked our head above to new all-time highs for the Qs. We traded there for a day, and now you can see we're rejecting here at these prior highs. So certainly something to take note of and be aware of right now. So I wanted to talk about that first on the discretionary side. Let's look at some technical trade setups now. Let's start with MITK. Now I want to see if some of these trade setups, so I usually take notes before this, and we had the FOMC announcement, so hopefully most of these are still intact. So MITK is a stock I've never really looked at before. This is hitting, and this is a scan that we have on our website. So all of these scans we're going to look at are available to download on our website if you're a TC2000 user. This is a Morningstar scan actually, and typically Morningstars, if you're going by the good book of old school kind of candlestick patterns, Morningstar patterns are seen more as a reversal pattern. So typically they sort of end a downtrend. So this is really not like the perfect formation, the perfect location for it. Formation is good. Location is generally not what you would see in traditional sort of ways to trade this pattern. So I don't personally trade a lot of Morningstar patterns, but I know a lot of traders that like to look at them, and they are a little bit rare. So basically it's a 3-bar pattern. You need a first good above average range to the downside. So that's this bar right here. Then you need this gap down and sort of doji candle for number 2. So it shows the indecision after a large down move. And then you have a large up move, which is essentially, confirming the second candle and totally reversing the first candle. So it is a pretty powerful pattern. They, again, usually are occurring at sort of reversal points after sell-offs, and this here was in the context of an uptrend, so just keep that in mind. But generally speaking here, I still just like this pattern overall. You can see it's got this nice rounded sort of base here, it's back towards highs, and it is, you know, showing some good relative strength. MACD is leading, so generally speaking here, I like this pattern, MITK. I actually think it's hitting our breakout scan as well, so I think it's showing up on a couple of different scans right now. So that's our first one there, Morningstar breakout there in MITK. Number 2 is Zynga. So yeah, this one weakened up a little bit from when I looked at it just earlier. This is hitting our gap down recovery scan. So what this is looking for is a stock that's in a broader sort of longer term uptrend, and we are experiencing a gap down on the session, but we are driving off of the lows of the session and starting to, you know, look like it wants to close near highs. So this has weakened a little bit since it first, you know, kind of popped up on the scan, but essentially what this is looking for is kind of like a capitulation day to the downside. It is looking for, you know, a big gap down. Sellers can't really, you know, add to those losses, and buyers start to step in and push the stock higher. That's kind of what we're looking at here with this particular scan. You can see it's coming in right at, if you want to try and draw, you know, a little bit of a lower trend line here, and this consolidation that has been more broadly at work. So you're getting a nice sort of edge case potential here to pick up some Zynga if you think this is going to ultimately resolve higher. So Zynga gap down recovery scan, that's number 2. Number 3, just a good old-fashioned 52-week highs on volume. Now, this has rejected as well since recording this video. This was a little bit higher, but essentially here with SUPN, you can see this was and still is breaking out to new 52-week highs today. So zoom out, you can see it's not at all-time highs, but it's certainly at multi-year highs. And it's got this nice sort of almost like an inverted pattern here. You got a nice base consolidation. This is sort of a day one breakout, good volume coming in. So keep an eye on this. Good relative strength compared to what the market's doing, right? So take a look at the SPY. You can see this, right? Looks a lot different than what this looks like. So even if you're not entering today, these are stocks you can just put on your watch list and pay attention to. Last but not least, I wanted to give you, actually no, 2 stocks still. I want to give you one on the short side. So this is LZB. Wow, and so this has continued to sell off. So this is Lazy Boy, and we can see the high volume breakdown that is occurring today. So we had, you know, sort of this little prior support in here around $41. We gap down right into it, and we are sinking right now down to around $37. So it's down 10%. This is a tough chase at this point to the downside, but this is something where, again, you could keep this on your watch list. What you can see happen is, you know, maybe this settles down around the lower 37s, and maybe for the next couple of days, we get sort of this little, you know, bounce up, and, you know, we get a 3-day sort of bear flag that forms, and then maybe you can, you know, look to short this on a potential sort of retest or a bear flag breakdown up closer to, you know, $39. There's lots of ways to sort of use this. I think it just shows that we have a weak stock that is breaking down from lots of overhead supply. So it's something you could, you know, kind of put in your arsenal there if you want to get some short exposure in the market. Last but not least, I want to leave you with one new setup that we took ourselves. It's a quantitative setup. This comes from a algorithm. This comes from our Lamorak trading system, and it is in GE, General Electric. So this is a short-term swing trading system. We put on a long trade here in General Electric earlier today. So we are actually underwater on this trade. We picked it up right around $13, I believe, and 50 cents was the exact fill that we have on this stock. So we are long GE right now at $13.50. We are looking for higher prices. This is a short-term swing trade, so we're not going to be in this too long. Just a few days is the average hold time, three or 4 days or so. So we don't plan to be in this one way or the other too long, but this is a technical long setup that we are looking for here for our Lamorak trading system. Entered it earlier in the session. So that is what I have for today's action. Leave a comment below. Let me know which one of these stocks look most interesting to you. Doing anything with this FOMC announcement. Let's take a look on the S&P again. So it's still trading around 421 right now. So we'll have to see how this closes out the day, but leave a comment. Let me know what you're looking at. Let me know if you're making any moves off of this announcement that just went out. I haven't even looked through any of the statement really just yet, but I'm sure there will be plenty of info on that later today. So thanks so much for tuning in every Wednesday. Trade ideas just like this. You can subscribe to our YouTube channel or follow us at thetraderisk.com. Thanks so much. We'll see you back here on Friday for the market analysis video.